Monday, January 12th, 2:13 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Going to discuss the US dollar. US dollar index. Going to show you the currencies that are inside the US dollar index, the major ones. In the futures markets, you could trade currencies as well as in the equity market, aka the stock market. We have events coming up soon too. Get to that in a moment. So if you want to trade the equity, aka the stock of the US dollar, if you're bullish, you trade UUP. The company that manages that is the one that's buying the futures and vice versa. So instead of needing margin to trade short, they also have a stock ETF that trades inverse of UUP, which is bullish. The bearish is UDN. So it's pretty darn simple. You could buy either one. Yep. Again, they trade regular trading market hours. Now, if you want to participate in the options market or the futures markets, well, again, you need a brokerage account that permits that. Not all brokers let you trade options or futures. I'm going to go to the futures market and show you now the major currencies inside the US dollar index. The far left is the US dollar index. Second from the left is the euro. Third from the left is the Japanese yen. And the last far right is the British pound. These are the three largest currencies inside the index. There's more than three. But these three represent the heavily weighted average. And they're in order. Again, the euro represents the largest percentage of the US dollar, followed by the yen and the pound. This is a daily chart. So looking in the chart on the far left, US dollar, it's red. Last week made the new high for the year. And here's the low of the year, this yellow horizontal line. Open this up a little bit more, just give you some content. It's a 3-month chart. We are below last year's high. Okay. Here's the low of the year. Came down just shy of testing here. And since then we went higher, but we haven't taken out the high of last week yet. The trend reversed. Lower high, lower low, coming down to this key level. Now, this red zone here on top was a key zone I had marked up, expecting it to have resistance, potential reversal, and that's what's occurring here. The euro trade inverse, very similar to the charts. Made a higher high, higher low off the lows of this year. The Japanese yen, lower low, lower high, new low for the year. Huge consolidation. And the far right, the British pound. Higher high, higher low. Similar to the euro. So again, they are not all trading the same. They represent a big part of the dollar. Let's go on to the US dollar chart. Top down, multiple time frames. And then we get to the geopolitical. Futures markets open Sunday evening, where the stock market doesn't open till Monday. So that's a nice power. Be able to trade Sunday night. Early bird catches the worm instead of waiting until the stock market opens Monday. And again, the futures markets close Friday. So we're looking here at a 20-year chart of the US dollar index. Bottom left is the low. And up here was the high from 2022. So again, past 20 years, the low was here, 2008. And the high for the past 20 years was 2022. This is the high of last year, 2025. And the dollar sold off. Went into this huge consolidation phase. And currently, again, we're not even in the middle of the month yet of January. inside candle. Simply means it didn't take out the high low of last month yet. Big consolidation here. Forming what's referred to as an H pattern means expected to go lower. Since today's the first trading day of the new week, we're looking at the weekly chart. And here's the high of last year, this yellow horizontal line, the low of last year. Huge consolidation here. And what happened? We had this minor consolidation up here, like 4 candles. Inside candle, which is a solid body, equivalent to a red, and we sold off, went down. Then we had that inside candle here. Simply means didn't take out the high low of the prior candle. But I drew this Fibonacci. Top of there, top of there. Sorry, top of that green candle, bottom of that red candle, Fibonacci. Because we were in a trend and we made a reversal. When we broke above that inside candle, that was last week, this Fibonacci, key levels I'm looking at is the green, the blue, the green, the red, and the blue. The red is not a Fibonacci number, it's just midpoint. So last week we came up, tested midpoint, closed above it. That means halfway of this trend, we closed above it. And current week, which is just today, Monday, inside candle. The probability is if we go up and test the blue, that means a higher probability the next time the dollar pulls back, it shouldn't break. It doesn't necessarily have to come all the way back here, but it shouldn't break. And if it happens like that, that doesn't break, look for that reversal, then it should have a higher probability going back up and break up at this high. This could take days, weeks, and months to play out. But I'm showing you so you're situation aware. Because down here, we had buyers down here multiple times at these lows. Time will tell how this plays out. But I already have key levels, multiple time frames. I'm looking for trade opportunities. Okay, now we're on the daily chart. Here's the low of the year. Again, went up. I already showed this on the other chart. Just want to show you again. And today, huge price action. Big trading range. Here's a key zone, the gray area, and buyer stepped in there. We're taking to an intraday chart on the 4-hour. Here we are on the 4-hour. Let's put it on 10 days. There we go. Past 10 days. Prices fluctuate in the markets. Obviously, you can see here, went up, pulled back, went higher, pulled back. Never took out that swing low. Had a nice run up here. Closed the Friday. That was a high of Friday. And since Friday, opened up Sunday night, and we sold off. Big red candle, big sell-off. Midpoint in that big body. Here is a smaller green body, midpoint, label that potential. Trade ideas off of those. Now I want to take this to the apologize. Just to the weekly. Leave it on the pairs. And then we get to geopolitical. This is 9 currencies. Well, sorry. 8 currencies and crypto, Bitcoin. The top left, again, this is weekly charts. The top left is the euro, currently inside candle. The middle, Japanese yen, broke the low of last week. British pound, inside candle. Australian dollar, inside candle. Canadian dollar, inside candle. Swiss franc, inside candle. You got it so far? So all these currencies, other than the Japanese yen, are still trading inside from last week's range. Mexican peso, all-time new high. Broke above the high of last year. The Mexican peso, the neighbor to the south. And this is, again, the neighbor to the north, Canadian dollar. So you have the Japanese yen, broke the low of last year. Sorry, Japanese yen broke the low of last week. Mexican peso broke the high of last week. Chinese yuan, the US dollar, broke the low of last week. Yeah. So big trading partners, Canada and Mexico are our biggest trading partners. Canadian dollar, inside candle, but the Mexican peso, higher. So we pay more for the imports. Our dollar is weaker. We pay more for the imports from Mexico. Japanese yen, okay, we see that's lower. Again, the bulk of our imports come from our neighbors, Canada, Mexico. And we get a lot of imports from China. So US dollar broke the low of last week. Yeah, you got it. The US dollar against major currencies is getting weaker and you're paying more. Hopefully your income is going higher week after week. And if you want to look here at Bitcoin, inside candle. So let's go to the fundamentals now. The Federal Reserve has mandates they have to meet so many times a year, and they vote to either change interest rates or leave them alone. There's a meeting this month, Wednesday, January 28th, 2 p.m. is when they're going to vote. That's 15 days from now, 23 hours, 35 minutes, 48 seconds. So right now, the numbers are showing the current target rate, 350 to 375. Well, 95% of the probability is that's going to be left unchanged. There's a 5% probability it'd be lowered. This could change tomorrow. Again, majority are speculating the rates would be left unchanged. Got it? Show you some more insight. This is the U.S. national debt. Remember last year, it was below 37. It was 36 trillion. Then it went to 37 trillion. And currently now, since last year, it went higher. It's over $38 trillion and almost 500 billion. That's the debt. We are paying only the interest on the debt. That's ugly. Give you some more insight. Let's scare the kids and have these numbers, and I'll give you some more information. Yesterday, the Federal Reserve Speaker, the board member, the leadership of the board member, there's several board members, they all mandated how often they could serve, how long. So the current Federal Reserve board member, his term ends this year in May. He can still be a member of the board, but he's not going to be in the leadership position. We'll find out if he's going to retire or stay as a member of the board. The Department of Justice sent a letter to the Federal Reserve Friday. Those are two federal agencies, and the leadership of those agencies were appointed by the current president, the executive branch of the U.S. government. Department of Justice follows the command, the requests of the executive branch. That's the president. That letter, it's public record. You can read it. Never in my life have I ever heard Department of Justice going after the Federal Reserve. But we'll find out if the courts drop that case. But the point is, win or lose, there's already a case documented, pending against the Federal Reserve. The executive branch has already done what they wanted to do against the media and already against the legislation to Congress. That was to have distrust put into the mainstream media, any media, and Congress. He did that his first term. He's done it again this term. I'm talking about he, the one that's in the executive branch. That's the president. Their supporters, his supporters, not everybody, but his supporters, believe that again. Now they have, well, because his comment said there's less trust, because he doesn't have trust, because he says things that I'm not going to say nasty. So again, it's already hardwired in many people to believe there's can't be trust in the media nor Congress. So win or lose that case, Department of Justice against the Federal Reserve, he already put toxics in the water to have his people believe that you can't trust the Federal Reserve. Again, that's another chapter, another scene occurring, building up bigger things that could be much worse. So a lot of people understand the history of gold, currencies, and interest rates. So I'll give you a brief history here. U.S. interest rates from the Federal Reserve are between the banks, which are the members, not all banks are, and that's the overnight lending rate. Typically, when the U.S. interest rate goes lower, that weakens, devalues the U.S. dollar. Ask yourself, do you want a stronger dollar or lower interest rates that are between the big banks? You're not participating in that. Again, it's the big banks that are members of the Federal Reserve when they lend to one or the other at night, the interest rate. It does not have a direct impact on your salary, your spending. Those are based on U.S. Treasury yields that also change during regular hours, and those are other videos. Point is, I showed you multiple charts. The U.S. dollar is getting weaker. Your buying power is less. You're paying more for whatever you're buying. So if your salary is not continuing going up, you're going to have hard choices to make where to cut spending. And the other part is gold. Yeah, the United States dollar used to be pegged on gold. That means every dollar, if you had a dollar, you could go to the bank and cash it in for gold for what was it, like an ounce or something like that. The point was, when that occurred, the U.S. nation was younger and a smaller population. We had more currency. We had more gold. We had more gold in stock than our population. There's only so much gold on this planet because remember, gold is not a natural substance or metal from this planet. It came from somewhere else. That's why I remember science. So the point is, the United States does not own all the gold, but the amount of gold we have in the currency amount, there's not enough to, if each person brought their dollar to the bank to cash in, there's not enough gold to give each person that gold for the dollar. But again, that's not done anymore because we came off the standard. So one reason, again, is because our population grew bigger. Where was the logic? You were not going to stay, if you wanted to grow your nation, improve, if you kept it pegged to gold, there was not enough money to keep loaning out to grow businesses, to investors, speculator. Yeah, if you want to peg it to oil, some countries, some think tanks say the U.S. should peg its dollar to oil. Well, that's another commodity that can be manipulated. Other reasons too. So it's not. The point is, thank goodness we got off the gold standard because, yes, our deficit grew. That's not because of the dollar nor gold. It's because you have the executive branch and the legislative branch both approve. Remember, the legislative branch, that's the Congress, they write the check, and the executive branch, the president, signs the check. So they both colluded, every administration since I've been alive, to increase spending. That being said, when you carry a larger debt and only paying the interest, that also devalues our dollar. So it's not just what I just showed you, the interest rates, but it's also the degenerates in multiple branches of government I just told you about. And now when you have federal agencies going against each other for political gain, not for the best interests for national security or for the nation's better. Nope. Yeah. Well, I just showed you could make trades if you're bullish or bearish the dollar using stocks, as well as I mentioned options and futures. Between now and that Wednesday, January 28th FOMC meeting, okay, we'll look at the major currencies here. Things could change multiple times on these trends. If you want to trade the individual currencies, I shared with you, you could do that, or you could trade specifically the US dollar stock index. That's just some basic geopolitical in charts and economics and finance I shared with you. I hope you appreciate it. It's more insight than any place I hear. Yeah. Shamefully, most of the people are blessed to be ignorant on what I just shared with you. That's a fact. It's not the business of the mainstream media to educate the public. Remember, the mainstream media is owned by super wealthy people on both sides. They have their own agenda. But what I just showed you is fact, the charts And every person that I know can catch this, understand this very well. I just showed you there's opportunities, regardless of what your political stance is, what your economic stance is. You could invest baby steps in currencies as well as financial assets. There's also other events occurring this year too. This month, just to give you some more insight. Friday, January 30th, the continuing resolution. That's the last Friday of this month. Congress has to pass that or government shuts down again. Yeah. And also Monday, January 19th is a federal holiday, so the markets close. This is an important month to be situation aware with your financial assets. Thank you as always, spending just a little time with me. That's it for the video. Thanks for watching.